Good morning, good morning, good morning. Welcome to today's morning blast. It's Thursday, the 27th of February. Where has the month gone? January seemed to take forever. February seems to have gone in a blink of an eye. Before we crack on, let's get on with some legals. Nothing to discuss on this basis session constitutes trading or investment advice. Nothing inferred. Nothing. No endorsement. Oh, wow. One sec. Nothing discussed on this space and session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trades PIQ or PIQ Suite, or indeed the hosts, which, as you know by now, is Mr. Michael Brown and myself, Ryan Paisley. I'll see what happens when I try and do it without reading the script.
It's been a long week, hasn't it, mate?
It has. What a year yesterday was. Jesus.
Oh, I know. February may have gone in the blink of an eye, but yeah, it's been a long old week, and it's only Thursday morning.
Exactly that. But still, pints later, lovely jubbly.
Indeed. Right. Should we crack on?
Sorry, can you sound a little bit more upbeat about managing to see my lovely face later?
Oh no, I'm just mildly hungover this morning, so.
Oh, brilliant! Right, crack on.
Hence the degree of lethargy in my voice.
Oh, right, fantastic.
Starting my day at 6:45 this morning, delivering a training session was not exactly a fun way to nurse my sore head.
I'm not gonna lie, my day has been made.
I'm sure it has. Right, let's get on with things then. God. Good morning, everybody. It was, to be honest with you, a relatively quiet day yesterday. The S&P and NASDAQ both closing pretty much unchanged. Really, that was obviously before earnings after the close from NVIDIA. Conviction very much capped before that earnings print, and that very much echoed what we saw in terms of markets elsewhere. Treasury yields did tick lower, though, once more, with the 10-year falling 5 basis points to 4.25%, and the 30-year also slipping by 5 basis points as well. That didn't do too much to the foreign exchange market, with the dollar trading broadly flat on the day around 106.50, which is where we open up this morning. Cable did pair a very brief foray north of the 127 figure, and it remains the case that 105, a move substantially north of that level, is still too much to ask for the euro. In terms of those earnings from NVIDIA then, they were, of course, what everyone was waiting for, not just yesterday, but it feels like we've been waiting about a month for them. They did deliver beats on top and bottom line, with adjusted EPS of 89 cents above the 84-cent street estimate, and revenues in the fourth quarter of 39.3 billion, above the estimate of 38.25 billion. So pretty solid figures there. Data center revenue also above expectations, and gross margin at 73.5% was also in line with expectations. Guidance was, I mean, I don't want to use the word soft, because this is a stock that where the numbers are quite frankly ridiculous, because NVIDIA do see first quarter revenue at $43 billion, and they also see first quarter gross margin at between 70.5% and 71.5%. I mean, I was having this conversation with my esteemed colleague Chris Weston last night.
Lovely bloke.
You know, top man, no one better than him. If we're really complaining about a company that's delivering a margin of 70%, and you have Bloomberg running a report this morning saying NVIDIA underwhelmed with its report, right? I think this is a little bit of hyperbole going on here.
Yeah, exactly. And also, remember, like, the little stat that we spoke about on Monday, I think it was. Relative to other AI chip manufacturers, they're actually very cheap in terms of PE and all that stuff. It's like, I'm not saying get long, but fucking I don't know why everyone's so determined that it's going to, the answer's going to fall out of it. I don't believe for a second it's like a Tesla or something like that, where you just knew it wasn't worth $1 trillion when it was trading at that market cap.
Yeah, no, you're absolutely right, and I think I know I don't like when we agree, but I think the other thing that people have got to remember is that as the company grows, as the sector grows, as the whole AI theme matures, there is going to be more competition. You're not going to be able to maintain a margin of 75-80% forevermore. You're not going to be able to deliver double-digit or even triple-digit revenue growth every single quarter. No. And I think people just need to adjust to that. really.
Yeah.
And the market did seem to struggle to digest the Nvidia earnings yesterday. The stock was initially up as much as 3% after hours. At one point, it was then down about 4% very quickly. We settled about 1.5% lower during post-market trade. To be honest with you, well, sorry, I was just going to say, for all the hype, it was a little bit anticlimactic, I think.
Yeah. Well, do you know what? Because well, I know you saw the tweet. Because apologies for the seagull. I think nearly smashed into my window. But I know that. Remember the tweet that I posted yesterday? It had the makings, and I called this like 30 minutes before the figure. You could know the results before the announcement, and you could still lose money.
Yeah, absolutely.
It was so kind of foreseen in that instance. Like, beats. I think the first initial move was a knee-jerk lower, if I recall correctly, and then knee-jerk higher, knee-jerk lower, back to where we began. But and to coin a phrase from the crypto bros, we are so early on AI-related stocks.
Yeah. Hello, are you still there, Ryan?
Yeah.
Oh, you are. Oh, right.
That was it.
You just went very quiet very quickly.
No, sorry, it was more to follow your point about you can't keep doing this every quarter. We are just so early in the industry. And this whole thing. And I saw I think it was Bloomberg run a note yesterday, an article, an opinion piece, and someone made a very valid point for potentially like the biggest AI winner is a company that doesn't even exist yet. And that's how early we are in this cycle.
Potentially. Yeah, that's very true. I think it's one of those where everyone's got a little bit overexcited. They've over extrapolated from what Nvidia were doing 2 years ago and gone, this is going to carry on forever. And that's clearly not the case.
Yeah, exactly that.
Anyway, moving on from Nvidia, it is worth mentioning, actually, just on a broader level, now that those earnings from Nvidia are out of the way, there is, I would argue, not really any kind of major macro event risk until the jobs report next Friday. So I think one of the things that I'm very keen to see in the next couple of sessions is, do we start to see people coming back into riskier assets now? Obviously, we've had, the S&P was unchanged yesterday. Before that, we had 4 straight daily declines. How much of that was people just trimming risk into this big earnings event? And now that that's out of the way, and also month end is out of the way as well after tomorrow, do we start to see the dip get bought? So I think that will be interesting to watch. Anyway,
just quickly on that, sorry to interrupt again, but you're right in terms of calendar based macro kind of catalyst, but obviously we've got a headline risk all the time at the moment.
Of course, Trump,
and obviously Zelensky's going over, I believe, tomorrow to potentially sign this minerals deal. Just a caveat on that, I've seen a lot of people saying, this means that oil prices are going to dump because sanctions are going to be lifted. There's a huge distance between US and Ukraine signing a minerals agreement and a cessation of hostilities, and then sanctions being removed from Russia. There is a long way between those 3 things, and a lot of things can go wrong in the meantime to even make that time even larger. So anyone thinking that as soon as this mineral rights deal is signed, that's the war over and the sanctions are going to be lifted, they got to go give their head a wobble, unfortunately.
No, you're absolutely right on that one. And of course, the degree of headline risk is not going to dissipate anytime soon. Anyway, in terms of a few other bits and bobs from yesterday, just briefly to run through, because it wasn't all about Nvidia earnings. We did have another solid Treasury auction out of the United States, 7-year sale, stopping through the when issued by 0.9 basis points. The 2, 5, and 7-year sales this week have all stopped through by give or take 1 basis point. People really can't get enough Treasuries at the moment. I think personally, the risk reward does tilt much more in favour of long Treasuries at the moment. Basically, the argument is it's easy to envisage scenarios where the Fed cut 50, 100, 150 basis points this year. It's quite difficult to envisage a scenario where they hike by that degree, unless you're Dickie Matthews, of course, who may or may not be listening. In terms of other bits and bobs, one for the AI folk, if Tom Talks Cars is here or indeed even alive this morning, Amazon, they have rebuilt Alexa. They're apparently now including generative AI in the Alexa assistant. Have I activated your...
Yeah, don't say it. Don't say the word. Right,
that's brilliant. Well, while you go deal with that, I will tell you about BP because they had their capital markets or strategy day yesterday. They are, doing effectively what they've already told us they were going to do, going to largely dump the whole renewables nonsense, increase their investment in oil and gas to about $10 billion per year. They've also announced a strategic review of Castrol, which is, of course, their lubricants division, and that will probably end up with that being spun off. Of course, this all comes after Elliott took a 5% stake in the firm. But to be honest with you, I don't think BP have really done enough to pacify the activist investor just yet. And last but by no means least from me this morning, story out of the States. Obviously, bird flu is a big thing in the US at the moment. The US are apparently looking to import between 70 and 100 million eggs in order to address a shortage, which is, of course, no yoke, but it's absolutely cracking.
Oh, God.
It's cracking news nonetheless.
Oh, double. Oh, double.
Although
He went for the double.
I do wonder,
He went for the double.
and I'll warn you, this isn't a pun, but will the eggs be tariffed?
Yeah, do you know what? This is how bad it is. I'm now like overthinking that. Was that like a really secret part?
No, it wasn't at all. No, that was a genuine question.
Right, okay.
You know, you're going around going, we're going to put tariffs on this, tariffs on that, tariffs on this, and then now you need everyone's eggs. So,
well, I know Turkey are a big winner in this because they've already sent God knows how many millions of eggs over there. So yeah, potentially egg tariffs. There you go. As you said, it's no yoke.
You can't use my puns.
I know. I'm just jealous. Is that you done for the time being?
It is, mate. It is.
Right. Okay. Thank you. Well, thanks for that, Michael. Again, reminder: no overnight news roundup this week as Zach is skiing. So I've managed to try and do something myself, and I've used a bit of ChatGPT to categorize it. So it might be a bit of structure for once in my segment of the show. Started off with markets and corporate developments. In EU defence names, Rheinmetall target raised to a street high of €1,300, but Morgan Stanley reflecting continued interest in European defence stocks. Nissan considering replacing their CEO. According to reports, a management shake-up could be announced as soon as March the 12th. Lloyd's have acknowledged misclassifying 44.1 billion with a B pounds of deposits that they submitted to the Bank of England, and that's according to data used for security on customer interest rates. So basically, they were misclassifying funds, so they didn't have to put as much capital in the Bank of England. I'm not a fan of tinfoil fedoras, but you don't misclassify 44.1 billion by mistake. There you go. It's just that's bonkers. I thought I was bad with spreadsheets. BlackRock is reassessing its that wasn't meant to be funny, you twat. BlackRock is reassessing its exposure to Australia, citing stretched valuations and weaker growth forecasts. Goldman Sachs, Citigroup, what we got there? Goldman Sachs added President John Walden to its board, fueling succession speculation. And Citi have appointed Chris Biotti to lead its North American private bank business. US dock workers, the East and Gulf Coast unions have ratified a new 6-year contract, easing supply chain concerns in major ports. Federal workforce reductions. President Trump signaled more cutbacks ahead, calling parts of the government bloated. Elon Musk echoed cost-cutting sentiments during a cabinet meeting. Just some tariff and trade headlines. US, Canada, Mexico. White House still plans to impose a 25% tariff next week, despite earlier hints of a possible delay. On EU tariffs, President Trump threatened 25% tariffs on EU imports, particularly automobiles, stating the bloc was formed to screw the United States. That's a quote. The EU vows an immediate firm response if enacted. Commerce Secretary Lutnick notes that if Trump is satisfied regarding border and fentanyl concerns by March the 4th, some tariffs could be paused, but global tariffs remain slated for April the 2nd. Mexico Deputy Foreign Trade Minister says they're trying to avert tariffs by highlighting progress on drugs and border security. With Canada, the regulator is set to impose fees on Google to cover operational costs tied to the country's new online news laws. Moving to commodities now. Oil recovering from 2-month lows after President Trump revoked Chevron's license in Venezuela. It was Biden that gave Chevron the license, we remember, just not that long before he left office, citing lack of electoral reforms under Maduro. I believe Trump said something quite hawkish against Maduro last week, basically saying he's not. I don't think he used quite the words "enemy of America," but it was that ballpark. Forgive me, I can't remember the quote. Gold pressured near the $2,900 an ounce mark, with the dollar firming on trade.
Lost its shine.
Oh God, I missed the opportunity. Oh God, I hate. Is copper shiny? Well, anyway, copper trading subdued on ongoing talks of copper tariffs and mixed global demand signals. Just on copper, anecdotally, I posted a piece yesterday, or a cool chart yesterday. Basically, loads, like we've seen in gold, there are a ton of big gold physical players that obviously gold trades in the Shanghai market, London market, and in New York. And because the fear of copper tariffs, since Trump took office, there's been a huge amount of shipments from these countries outside of the US into the US to obviously to kind of front run the tariffs. And now the arb between London, Singapore, and against the New York price is like the largest it's ever been. It's massive. So that was a hell of a trade for anyone that got on that, and anyone was thinking ahead when Trump came into office and was predicting that. Well played to them. Geopolitical developments: Israel, Hamas. Hamas handed over the bodies of 4 Israeli hostages. Israel released Palestinian prisoners. Talks continue under the Gaza ceasefire framework. Russia, Ukraine. President Trump suggests a US-Ukraine rare earth partnership, but with no major security guarantees. Expects Putin to make concessions to end the conflict. As we mentioned just now, I believe Zelensky's still due to be going to the US tomorrow. Taiwan, defense officials have reported increased Chinese military activity, but no live fire incidents detected, keeping regional tensions elevated. In North Korea, Seoul's intelligence indicates Pyongyang has sent additional troops to Russia, hinting at deepening ties between the two nations. Finally, on geopolitical news, New Zealand and China. The New Zealand foreign minister raised concerns about Chinese military drills in the Tasman Sea during her visit to Beijing. And just a few bits, additional news in brief. UK infrastructure and inflation. The BCG report warns of Britain's 900 billion infrastructure project could stoke inflation due to labour and materials shortage, even with a net migration of 750,000. Munich airport, 80% of flights have been cancelled over a 2-day span, causing significant travel disruptions in Germany and neighbouring regions. That was because of a union strike, by the way. South Korea household borrowing. Authorities plan to tighten borrowing rules in the second half, aiming to prevent a debt bubble. Foreign aid and Supreme Court Chief Justice Roberts paused a lower court order on the Trump administration's foreign aid spending cuts or funding cuts pending further review. Measles outbreak. For those that this could be something that one of these kind of stories that's not one of these stories that's a non-story until it's a big story. There has been kind of simmering away now quite a significant measles outbreak in Texas. It's like the biggest in decades, I believe. We're just starting to see some fatalities starting to come through now. So far, there's been a child, unfortunately, has been killed by that. So one to keep an eye on, because we all know, unfortunately, how these things can materialize, and CDC gets involved. And just one to have on the radar for you. And finally, and it's completely unmarket related, but we've been waiting a long time for this. Potentially today, we see the release of the flight logs and associated names of the Epstein list. So which one are you lots on that, Mr. Michael Brown? Not looking at you.
I was going to say, don't look over here. That's for sure. Moving swiftly on. Shall we get on to what's happening today? Let's get off that island. Oh God!
Oh God! He's so good. He's just so good. This is what he does. This is what he does.
Oh dear! Right, today, what's going on?
What day is it?
Indeed. Right, let me get my bloody notes. Where have they gone? Here we are. Right, today, very quiet European morning. The next notable calendar actually comes at 12:30, and that is the release of minutes from the January ECB meeting. To be completely honest with you, they are not going to add anything of any importance whatsoever to the broader policy debate. Of course, the ECB set to deliver another 25 basis point cut at their next policy meeting, which is Thursday, the 6th of March next week. We do have a busy US data docket market as we move through the afternoon session. The second estimate of Q4 GDP, that is due at 1:30 this afternoon. Expecting that to be unrevised at 2.3%, although given the ongoing jitters about the state of the US economy, the market is not going to be in any mood to look favourably on another downward revision there. Also at 1:30, we have the January durable goods orders figures. Orders expected to rebound by 2% as 2025 got underway, compared to the 2.2% decline that we saw in December. Remember that orders, durable goods orders, do tend to be skewed quite significantly by what's going on with Boeing and also what's going on with the military. So there's a lot of noise in that data. And also at 1:30, we have the weekly jobless claims figures. Initial claims expected at 221 from a prior 219,000. Continuing claims, meanwhile, in the week to the 15th of February, that figure expected at 1.872 million, up from a prior 1.869 million. And of course, the continuing claims print, that does coincide with the survey week for the February non-farm payrolls number, and that NFP data is due next Friday. In terms of other bits and bobs, today at 3, we have pending home sales out of the States. And then at 11:30 tonight, we have Ryan's favourite economic indicator, which is the Tokyo CPI figures out of Japan, expected to rise by 3.2% on the year, a modest slowdown from the 3.4% that we saw in January. Earnings today, there's nothing really of note before the market open, at least in the States. After the close, we do hear from Dell, which may be of some interest for the tech folk. And then in terms of central bank speakers, it is a busy day from the Fed. We have 6 Fed speakers, including Harker, Hammack, Bowman, Barr, Schmid, and Barkin, who will be speaking throughout the day. Barkin, I think, has the easiest job in central banking at the moment. He made a speech on inflation on Tuesday. He's repeating that speech today for the 3rd time, and then he's going to repeat it all for a 4th time next Tuesday, just in case people still haven't got the message. But nonetheless, plenty of Fed speak on the docket as well. And of course, headline watching, particularly for those of us here in the UK, Starmer is in DC today, meeting the Orange Man. They are due to sit down at about 5 o'clock London time, 5:15. So I'll be in the pub, but if you're not, then give it a watch. There might be a few headlines.
They can put it on the TV in the new moon.
Well, are they showing comedy in
there?
They can
put it on the TV in the new moon. Hey, they do it Gibney's. Maybe we'll go Gibney. Anyway, enough about our social life.
Yeah.
Michael, thank you so much as always. Listeners, thank you for tuning in. As always, we hope we added a bit of value to your day and put a smile on your face. And we will see you all tomorrow. Take care. Keep it tight.
We will indeed. Bye for now.